right? So Bitcoin is going to a billion, or we're going to issue $1 trillion of this new debt instrument or whatever. It's never in modulation. In reality, behind the scenes, what they're doing is quite nuanced. They have like 8 tools they can push. They can issue equity, they can issue bonds, they can do converts, they can do preferred, they can do perpetual preferreds, they can buy Bitcoin, they can sell Bitcoin, they could theoretically do option overlay strategies or lend Bitcoin. They have like this array of levers. And actually, if you look at what they're doing it very carefully. It's just they talk in infinities. So if you talk in infinities and then you sell 32 Bitcoin, people are like, well, they sold 32. They're obviously going to sell the other 831,000.
A major topic discussed was the market's reaction to Strategy's sale of a small amount of Bitcoin. Hougan believes the market may have overreacted because of how Strategy communicates its long-term vision. The company often speaks in extremely ambitious terms, discussing Bitcoin's potential to reach extraordinary valuations and presenting massive future plans. However, Hougan argues that behind those headlines, the company actually operates with significant nuance and flexibility. Strategy has numerous financial tools available to manage its business. It can issue equity, issue bonds, use convertible securities, create preferred stock structures, and employ various financial strategies to optimize capital allocation. Therefore, when the company sold a relatively small amount of Bitcoin, many investors incorrectly assumed it signaled a much larger liquidation ahead. Hougan compared this to everyday investors. Many people sell crypto for practical reasons such as taxes, expenses, or portfolio management, yet continue to remain bullish long-term. A small sale does not necessarily represent a fundamental change in conviction. His view is that investors often extrapolate a single event into an extreme future scenario, especially when companies communicate in dramatic terms.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Yeah, it was a brutal pull down. And the other thing that happened was that sentiment fell faster than the price. Actually, like crypto reached pretty close to peak despair on Thursday or Friday, right? Sailor was selling, it was over, people were rage quitting. I had to remind people that like not only 2 weeks ago we were talking about hyperliquid, 2 months ago we were talking about how Bitcoin was responding so well to the crisis in Iran. You know, sentiment can change so wildly over here. It is important actually to step away a little bit and get some perspective. We definitely try to make too many monotonic explanations for what happened. This happened because of X. It's always a series of things. I thought a lot about the strategy reaction, and I think it's almost their fault. The thing about strategy is it talks in infinities, right? So Bitcoin is going to a billion, or we're going to issue $1 trillion of this new debt instrument or whatever. It's never in modulation. In reality, behind the scenes, what they're doing is quite nuanced. They have like 8 tools they can push. They can issue equity, they can issue bonds, they can do converts, they can do preferred, they can do perpetual preferreds, they can buy Bitcoin, they can sell Bitcoin, they could theoretically do option overlay strategies or lend Bitcoin. They have like this array of levers. And actually, if you look at what they're doing it very carefully. It's just they talk in infinities. So if you talk in infinities and then you sell 32 Bitcoin, people are like, well, they sold 32. They're obviously going to sell the other 831,000, which is just not the way it works, right? Like all of us at some point have sold crypto for tax loss harvesting, to cover a short-term cost, whatever. And all of us will buy more crypto in the future. They're no different. But I do think because they talk in infinities, people take every step to infinity. And I think that was part of why the market reacted so poorly to that. I think it comes from sort of traditional argumentation, which is if you have a very hard skeptic and they say something is worth 0, you have to say it's worth $1 million so that you settle somewhere in the middle. And I think Bitcoin was raised in a world where 95% of people are like, this thing is worth less than 0. And so we were like, no, every Bitcoin will be $1 million. Or every ETH will be 15 million. Oh, you want to meet me in the middle at like 600,000? Okay. But I do think it's endemic to crypto. The reality is, and this is specific to this particular moment, we're entering a more fundamental driven, more grindy moment, more where it's going to be more nuanced, and it's about sort of like market share and percentage points, etc. So yes, that is something that has been part of crypto. Probably will 15 million though, I gotta say. That's pretty bold. I still think Bitcoin is almost like a punctuated equilibrium asset. It's like the asset that can go to $1 million or it can go to $5,000 ultimately. I think those are the two highest probability outcomes, and everything else in the middle is like relatively low probability. Well, I mean, if we're creating worst case scenarios, if you go to the 4-year cycle, which as much as I don't think it intellectually should occur, seems to occur. So you have to accept reality as it is and not as you want it. A 70%, 75% drawdown from the all-time highs would be what? It'd be in the mid 30s, something like that.
Something like that.
So you have to admit that that's something that is possible. I don't think it's likely. What we've seen over time with 4-year cycles is they've been, the drawdowns have been smaller. There's a lot less risk in the market than there was in the past. There's a lot more institutional capital and slower actors. But that would be like the point where you would, imagine it to be absolute max pain. I don't think we'll get there. I don't know if we're at the near-term bottom or if we could go a little bit lower. A little bit lower seems certainly possible. I'm not good at calling precise bottoms, but somewhere like that would be absolute max pain. It feels like somewhere around 50 is where many of the people who have been calling for this bear market think it ends. And there have been some smart people who have been on that bid. Will we get there? I honestly don't know. I suspect we'll be much higher in a year, but I don't know where the bottom is. The one thing there is strong academic literature in crypto is that it's a momentum-driven asset, which sounds so dumb when you say it, because of course it's a momentum-driven asset, but there is really strong academic research that suggests it is. And specifically what it suggests is that short duration moving average crosses are really relatively powerful indicators of returns. So things like a 1020 or a 520 or a 1030, anything in that zone, you can back test it over any time period, does a pretty good job of short-term momentum. Right now, that signal is negative, but that's an index that we track. I don't try to call bottoms, but when I want confirmation that the market has like found a turning point, not a V, but a turning point, those sort of short-term momentum have academic and real-world out-of-sample results that they're relatively effective. I think it's happening at a big degree, and it's one of the reasons it's so hard to bottom. You could buy AI stocks, which double every day, and boring companies like Micron become trillion-dollar behemoths. Jensen is anointing new trillion-dollar behemoths every day. I think it's Marvel now. Or you could buy crypto, where the polymarket odds say there's a 50% chance that the most important piece of crypto legislation will fail in Congress. And that's just a hard choice to make, right? Like the market hates uncertainty more than it hates bad news. And that is actually uncertainty. My view is fail or pass, I think we'll be better off when we get past the Clarity Act, because it's this sort of Damocles hanging over crypto. And I do think it's keeping money out of the market. It's one of the major things that keeping people from allocating.
When discussing downside risks, Hougan acknowledged an important reality. Although he personally does not expect a severe collapse, historical crypto cycles suggest that large drawdowns are still possible. Previous Bitcoin cycles have experienced declines of 70% or more from all-time highs. If a similar pattern were to repeat, Bitcoin could theoretically revisit significantly lower price levels. Institutional participation has increased dramatically. Spot Bitcoin ETFs have brought new capital into the market. Corporate treasury adoption has expanded, and overall market infrastructure is far stronger than it was during previous cycles. As a result, he expects future corrections to be less severe than those seen in earlier eras. Still, he emphasizes intellectual honesty. Investors should recognize that significant volatility remains part of the asset class.
Yeah, I mean, I think it definitely weighs on the sector. I think it's reflected in the prices for what it's worth. The prices are really low. What's Uniswap right now? It's a $1.6 billion protocol.
250 or something. Yeah, it's like super low.
I mean, all of these things are extraordinarily low. I think, I still think token value capture is a bigger deal than AI. I think they haven't sorted out token value capture, and I think they should. But AI definitely hangs over the space. There's lots of hacks. My base case is that these short-term setbacks have never stopped the market. Do you remember when everyone was like really worried that Solana would go down, which was similar to when people really worried that Facebook broke occasionally? They're like, oh, people will never use this thing. I mean, the DeFi hacks are, the AI-driven hacks are more risky than that. And Zcash is a great example of that. I do think it casts a shadow over the market, but I don't think it's the primary reason. But I do think it's a real thing we're going to wrestle with for 6 months, 9 months, something like that, before you build institutional confidence in that market. It's a good question. Well, from an institutional demand perspective, August basically closes down. That is just true. Like August really is very light. I've had more sales meetings today than I've had in a single day this year.
Oh, wow.
So I did 9 sales meetings before this call. It's 2:30.
Oh my God.
So there's a huge amount of interest. I do think the fact that prices are down, the fundamentals around stablecoins and tokenization, which plays to the institutional crowd, are still very much in mind and strong, is creating this sort of boomerang of interest. Will that persist through the whole summer? No. I mean, in August, again, it will really slow down. But right now, interest is still pretty high. People are uncertain. They're all wondering where the bottom is. They want you to tell them precisely. So that's still the market that we're in. They're not ready to jump in with 2 feet, but they haven't forgotten about the sector. Actually, the interest in the sector, from my perspective, is pretty high right now.
Are you going to tell us which assets they're asking about?
Look, the reality of the institutional market is most of them have just learned about Bitcoin and ETH. That's the reality. It is.
Yeah.
That's the reality. They haven't heard of Hyperliquid. They haven't heard of Chainlink. Some of them maybe have heard of Solana, but it falls off really quickly. And I always try to make an analogy that makes sense to crypto people. If I were like talking to you about drug manufacturers and I got past AstraZeneca and Eli Lilly, I could say names that could be true or could not be true, and you wouldn't. And I think that's true for crypto too. So that's the level that they're interested in. It's mostly Bitcoin and ETH, or rather Bitcoin and then stable coins and tokenization, with the question of how you play those. Right. Well, I was thinking of this the other day. If you think about this ecosystem, we're trying to do 2 things. We're trying to reinvent gold and reinvent finance, Bitcoin and everything else. If you take out Bitcoin and you take out stable coins, what is the market cap of what we're trying to reinvent finance with? It is less than $1 trillion, right? Like, it is a small entity. So everything that we talk about outside of digital gold is like handfuls of hundreds of billions of dollars. ETH, the largest asset, $200 billion. And then it falls off a cliff from there. Does it get to $500 billion? I'm not even sure. So it is a relatively small industry. It is a relatively small industry going after an enormous addressable market. That's why it's interesting and why it's a contrarian investment. And sometimes we miss that because we lump Bitcoin in, but Bitcoin is really a distinct thing from everything else going on in crypto. And that everything else is really remarkably small at this point. So I guess, if you look back at my career, I tend to get involved in areas that I think are inevitable, but are sometimes out of favor, because I think that's where a lot of the alpha is. So my first job in finance was as a biotech analyst. That was an area when I joined it that people were hugely skeptical of, right? Actually more skeptical of that than they are of crypto today. But it seemed like biology-based drugs and modifications were going to be a big deal eventually. And sure enough, they were. Now, the industry has gone through booms and busts and et cetera. But if you have an underlying technology that's sort of fundamentally undeniable, better, faster, cheaper, more effective, over time it wins. The other things I would point to in my career that fit that, I was early in ETFs, right? I was the CEO of ETF.com. People hated ETFs. Oh my God. There were congressional hearings about ETFs destroying the American dream, and they were labeled weapons of mass destruction. They were, but they were better, faster, cheaper, and more tradable than mutual funds. And now they're gigantic. Other things, I've been on the board of an AI-driven investing company for a decade. And a decade ago, no one believed that that was even possible. Today, they manage something like $10 billion. They're doing pretty well. And then crypto at the same time is the same thing. The thing that keeps me anchored in crypto is the underlying technology is undeniable. I gave this example on a sales call earlier today. You want to send, I mean, I know we use this example all the time, but it's really instructive. You want to send money to Indonesia. You could call JP Morgan, which has 300,000 employees and 5,000 offices, and they can get it there in 1 to 5 business days. Or you could use Ethereum or Solana or a blockchain with no employees and no offices, and it can get there in a second. That's like an undeniable fact. And that's true for equities and true for bonds and true for commodities. And there's been nothing really that has changed that about this particular pullback. So, look, if you've been in crypto for a while, I've been in crypto full time for 8 years, you've seen these long periods. Everyone's talking about how the current price of Bitcoin hasn't moved in 5 years. Well, that was true in 2022 as well. It was below the price of the December 2017 boom, right? We have seen this pattern before. And you have to decide if you're a trader or you're an investor. And if you're an investor, you just have to accept this as part of the course. If you're a trader, God bless. I don't know what to tell you. But if you're an investor, this is actually like an exciting moment. So that's where I come from. That's been my thesis. Technologies that are inevitable will win over time. Crypto feels like a technology that's inevitable. It's winning over time. I think it's doing just fine.
One of the more interesting points Hougan raised involves academic research on crypto markets. He noted that cryptocurrency behaves as a momentum-driven asset. While that may seem obvious to experienced traders, academic studies have consistently shown that momentum indicators can be surprisingly effective when analyzing crypto trends. Short-term moving average crossovers, such as 10-day and 20-day averages, have historically provided useful signals regarding market direction. At the moment, Hougan indicated that some of these momentum indicators remain negative. While he does not attempt to predict exact bottoms, he watches for improvements in momentum as evidence that a market reversal may be underway. For investors searching for signs that a correction is ending, momentum data may provide valuable clues.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.